but Asia has pulled back a little bit after a good open.
We'll ensure that the key ECB rates will be set at, repeating, sufficiently restrictive level.
We've been putting out the level of 20,350, and I think we remain on track for that.
BofA Securities has today upgraded the stock to buy from neutral.
It's looking pretty good, 60 points higher now on the index.
Domestic flows have been in the mid-cap and the small-cap segment.
The promoter entity, which is private equity Everstone, they sold 25% stake in today's block deal.
I think the unconventional monetary policies have gone too far.
It's another good, steady, positive session for our markets. The Nifty is up 0.3%.
More than 60% of our anchor book is subscribed by long mutual funds.
Market cap of Bajaj Auto, it's now hit almost 1.5 lakh crores.
Distribution networks in the states are going to need to be upgraded, so the demand is huge.
Aligned with RBI's digital lending guidelines drafted by face member companies.
Still at record highs for the Nifty, but the mid-cap index is up around 99 odd points.
Good afternoon and thank you for joining in. That is the day so far, the last trading day of the week. We are down to the last 1 hour. This is Closing Bell. I'm Surabhi Upadhyay. Joining me is Reema Tendulkar. In a bit, we'll have Sonia with us as well. What we've got on the screen is green, but a bit of a reversal. For the better part of this week, we've been talking about how mid-caps have been leading from the front, with the large caps kind of, sulking around the flat line. But right now, this afternoon is different. The Nifty is trying to get back to the highs of the day. Remember, we've had consecutive closes, 20,000 and 20,100. Will we get that close above 20,200? That is the big talking point. Banks have been supportive today, while the mid-caps are cooling off and taking it a little easy. Hi, good afternoon, Reema.
Hi, good afternoon. So the mid-cap index has recovered for the third day in a row. But that recovery is being sold into. So now the mid-cap index is just up close to about 55 points at the index level. There you have it. It's fallen more than about 0.5% from the day's high. It attempted a bit of a pullback at about 12.45, 12.30, 12.45. Let's see whether it holds in the last 1 hour of trade. The advanced decline ratio for now has more stocks gaining compared to the losing stocks. But there are still many mid-caps which are still significantly down on a week-to-date basis. Pull up a BHEL, 11% down week-to-date. PFC, 8.5% lower for this week. Tex Maco Rail, right. So a couple of these railway stocks still haven't recovered. This is the day chart, but if you pull up a week-to-date chart, and you would see that these stocks, there you have it, BHEL down close to about 12%. The two sectors which deserve mention, one is autos on the way up. The Nifty Auto Index has clearly been the leader today. Bajaj Auto, M&M, Hero. We'll talk more about it. And on the losing side, it's the FMCG name sulking. Asian Paints has been declining because of the rise in crude prices, perhaps the entry of Grasim. So Asian Paints continues to be a top loser, but HUL, Britannia too, quite a week in trade. But let's get in a few closing comments. How should you position yourself in the last 1 hour of trade? We're joined by Mitesh Thakkar here with a few closing strategies. Mitesh, would you hold on to your long bias, and what would the top stocks be to trade?
Good afternoon. I think we are maintaining a long bias, but what I've been observing and waiting for is a breakout on the bank Nifty. The earlier highs which we got, the highest weekly closing was 46,186 on the 20th of July, which was also the daily high on a closing basis. And the intraday pivot was around 46,200, 225. So we are still hovering around that level. The Nifty bank is not decisively getting past this 46,200. So in that sense, mildly in a wait and watch mode. But yeah, we're trading with long bias. The stock positions are on the long side. Only few short, but I think majority of it is long bias position. So I think that's the approach traders should take. Once we see the bank Nifty get past today's high of 46,280, then I think taking a 100-point stop loss, the bank Nifty can be traded for a 350 to about 400 point kind of rally. On the stock side, I have one buy and one sell. Apollo Tires is something which is breaking down, so that's a sell with a stop at about 383 for targets of 360. And Bandhan Bank is on the buying side. Keep a stop below 239. Look for a 260 as the target area.
Okay, those are two stocks. Mitesh, before we let you go, I just wanted your quick sense on IT stocks, because if we talk about the week as a whole, the IT index has really contributed. And today, so many of these IT stocks are hitting their fresh 52-week highs. There's TCS, there's I think Wipro at a 52-week high, HCL Tech. So one trend that's really dominated the market in the last 7 or 8 trading sessions is consistent buying in IT. Anything fresh on the charts, any trades, anything that you'd like to comment on here?
So we have been liking the IT index. We've had Infosys, TCS and Wipro as our recommendations. And if you look at the Nifty IT index, it still suggests that there's more upside left over here. The target which I'm looking at is closer to about 34,000 to about 34,200. So trading upside is left. But if you also look at the last 3 weeks, it's been 3 green candles, starting from 30,740 to now at about 33,280. So taking a fresh position, not advisable, but if somebody has it, just trade your stop losses and hold for targets of around 34,000.
Okay, Mitesh, got that. Rima, I brought idea up because if you leave aside PSU banks, which are a different story, in their own, they have their mind of their own. After that index, it's the IT index that's the best performer this week.
Yes, the IT index is up 2.5% for the week. This month, it's seen a rally of close to about 7%. And it's been a consistent rise. Every day you have the Nifty IT index gaining about 0.2, 0.3, 0.5%. So it's been a steady climb higher for the stocks. But let's turn our attention now to the bond markets. The sentiment has been boosted by speculation. I repeat, speculation over India's inclusion in the global bond indices. Lata has some insight. Lata, every now and then this topic resurfaces.
What's the season, isn't it? September is the season for this speculation, Lata?
Yeah, actually the rumors are a little old. It's certainly the season that, September is the time when people start speaking about this. And that's because every year in August, bond investors are asked by the various index providers whether they would like these inclusions. The replies come in September and the review is announced last date of September. And therefore, it's obviously the season for this. Now, the reason why this chatter has resurfaced is also because I must warn that this chatter is a little old. It's about a few days old because Reserve Bank had also asked a few custodians whether they can handle large amounts of money. And that also led to people wondering whether they know something about more money coming in. And therefore, you saw a fairly decent rally from Monday to Wednesday, Thursday. And today, of course, there's a little bit of a correction because the auction is over and that those bonds have come into the market. But importantly, the bond yields have not reacted very badly, although crude has gone to 94 and US yields have risen by about 2 or 3 basis points from already high levels of 4.28 earlier in the week. So there were enough reasons why the bond index should have bond yields should have gone up a lot, but it is resisting. And you could attribute it to anything. You could attribute it to the ICRR changes, or you could attribute it to the JP Morgan chatter. Now, the reason why it resurfaced is also because JP Morgan index guys appear to have made some reports saying that now they can handle withholding tax calculations. But we have really, no other evidence to go by. All we know is that the Indian government has been very steadfast that they are not going into Euroclear, which is one of the things foreign investors like bond clearances to go through. And they are not going to change taxes. And India doesn't have just withholding tax, it also has capital gains tax. And there has been no mood or no move to change that. So, this is seasonal resurfacing, but added by the fact that the Reserve Bank asked some custodians whether more money was, handleable by them. All that has led to the chat.
Okay, but Lata, you're saying that the two main issues because of which this kind of gets into a stalemate, lower taxes and this Euroclear platform.
No taxes.
Oh, no taxes.
Foreigners don't want taxes because that makes it difficult to, settle and things like that. But now,
no taxes even on the gains that they
capital gains.
Make. Yeah,
basically, capital gains is what they don't want. And what, if you remember, Tarun Bajaj decisively said they were not thinking of when he was Revenue Secretary.
Okay, so let's see if there's going to be any further announcements on this, or whether the government comes up and says anything at all, or whether this time around the index providers simply sort of toe the line.
To be fair, it has not been a very big rally, considering that this chatter has been around. It rallied from 7.2 to 7.1. The yields fell from earlier in this week to Thursday. But today, of course, there have been other factors.
And also inflation kind of behaved itself. This is the same period over which the markets digested the inflation.
And ICRR. So, too many reasons.
Okay. All right. Thank you very much, Lata, for putting that on the table, something that we should take note of for sure. We have Prakash Diwan now joining in on this leg of the show. Prakash, hi. Good afternoon. Happy Friday. I always love saying that to you because we're at the fag end of the week. And it's been a good one, right, for the equity market. Despite everything, we've got, in all probability, we've got to close above 20,100 for sure. I don't know if it goes to 20,200. and mid-caps seem to be kind of finding some even ground. But am I talking too soon?
Good afternoon, Sylvie. So, yeah, I mean, I think it's a lovely Friday. The way we've got the Monday morning views swept away with such flourish, it's quite impressive. But then, that's the other reason that we need to learn from that. When the texture of the market is weak, half a reason to correct is good enough. Whereas it didn't last too long because there was no fundamental reason or change in the underlying earnings capabilities or liquidity setup that would have changed. So I think small cap, mid caps will continue to do well, but it's unfair to bunch them, and have a broad brush kind of a outlook. It's very stock specific. Whichever stock has been overbought and has risen too sharply, is gone beyond its broad ranges of P multiples, so EV EBITDA multiples. That's where the correction is likely to be very sharp. And those corrections will stay. I mean, it's not something where recovery will happen because of that money. Once you book profits, if you're a smart investor, you would want to look at something which offers value. Right? So that's going to happen. So you will see newer names emerging. You will probably see newer themes emerging. So the defense, railway, to some extent, this EMS, this buzz, all that stuff which was on fire, you'll probably see a little bit of a change. So the scenario will change, but the momentum will continue. I don't think the market is getting into a bubble territory because everybody is so cautious. So that's when everybody is cautious, you really don't see too much of a thing unless there's a black swan event which hits us, and we really don't anticipate that. But far from that, I think we are very clearly in a bull run of sorts. When the names would change, themes would change, people will continue to dig out value and still make. So pharma, FMCG, some of the power names, PSU banks, all of that will probably give you enough opportunity to buy.
Prakash, to stay on, we want to talk a bit about Alkem because there is news about an IT department survey, and plus there is a new chief there. Ekta's here with the details. Ekta.
Thanks for that. Well, yes, Alkem is in focus. A CNBC-TV18 story has been confirmed as well, where the IT department is conducting a survey at some of their companies' offices and subsidiaries. There is no impact on the operations as per the company. Separately, they have indicated that they do have a new CEO. So Dr. Vikas Gupta has been appointed as CEO with effect September 22nd. Now, we do understand from sources that this is the same Vikas Gupta who was with Cipla before that. So he was the India RX head there, and he is a doctor by training with an MBBS degree. His previous work experience, which goes back into the early 2000s in the pharmaceutical space, is with Ranbaxy and then subsequently with Glenmark. Now, this would be a perfect fit according to most of the people that I've spoken to, simply because Alkem gets around 65% of their sales from India, Cipla gets around 40% of their sales from India, and hence somebody like him who's looked at the India business quite closely could be a perfect fit for Alkem.
Ekta, thank you very much for that. Pull up a 3-month chart of Alkem and you would see the stock has underperformed, particularly post their Q1 numbers, which came out in early August. The stock price around that time was about 4,200 and the Q1 numbers were disappointing. The company lowered its domestic, the India growth revenue forecast, and that disappointed the street. And the stock really hasn't participated in this mid-cap rally that we've seen in the last 1 month. Prakash, new guy at the top now for Alkem Laboratories. Is it time to bet on a pickup in the stock and the fundamentals?
So, it certainly is a very well-placed, well-positioned business, no doubt. In fact, the only thing that probably goes against it is the fact that, given its shorter history as compared to the bigger players like Torrent and Lupin and Supply and all, in the pharma space, you probably don't have too much of ownership that's not very well cemented or well established. The other thing that, people have forgotten is that this whole revival in the US FDA activity, and there are lots of approvals that are flying through, whereas last year we just had only inspections and adverse reports. There was nothing very favorable coming out. Now that is certainly move the focus back to the US market, because in certain pockets like Sun Pharma is demonstrated, Lupin is demonstrated, there is some revival or some kind of a comeback on the pricing power. So Alkem, which has 2/3 of its contribution coming from the India market, probably is not something which people would think would benefit from the pickup in the US market or the improvement in the US market. But I think it's a brilliant business. no doubt. And some of these homegrown businesses are more promising in the long run because they have less volatility. So I personally like it, but the market doesn't want to discount it at the same band or zone as some of the other names. But in this space, if you were to have a comparable size and a positioning, if you look at Zydus Life, my sense is that's another stock that's looking like a breakout of sorts after being consolidating for a long time. And the current approval that it's got, today's approval that we heard about, is probably a series of monetization this cycle that they will probably get into, which is very favorable. So I would look at something which is already demonstrated some sort of an improvement in its operation, and Zydus probably features there a bit more strongly than Alkem. Of course, pharma is such a wide space. You could choose anybody who's want to focus on to research or API. I mean, there'll be all different slots that they would fill. But very clearly, I think from a comparable size perspective, I would look at Zydus.
Okay, got that. Prakash, stay on. Actually, I want to get you in on this IT question as well. I was asking Mitesh a while back just because the stocks have done so well. But before that, Rima, you explained to us you were looking at Infosys anyway, and I think they've also announced another deal, $1.5 billion over multiple years. Yeah. But more positive deal news flow coming through for IT majors.
So, most of IT is doing well, right? All the IT stocks, barring Infosys, are at a fresh 52-week high. TCS, HCL, Wipro, LTI, Mindtree. These are the four, there are 5 IT companies in the Nifty. 4 of them are trading at a fresh 52-week high, except Infosys. Infosys is down 10% versus its 52-week high and off 22% compared to its all-time high levels, which is closer to 1950. Now, the reasons for the underperformance are well flagged off. The Q4 numbers were weak. The Q1 numbers were abysmal. Their guidance for the full year was a shocker. The margins have been compressing for the company. They've still not announced wage hikes for their employees for FY24. There have been a spate of top-level exits. So these are the reasons. But I just want to highlight that the company's deal wins, which is a positive, have also accelerated. Now, today the company has announced an MOU. This is an MOU. It's not a final agreement, but it's an MOU with an estimated deal size of $1.5 billion over 10 years. But since the beginning of the year, the company has announced 3 mega deals. We've never had, the company announce 3 mega deals in just the first half of the year. It's actually quite phenomenal. In the first, the beginning part of this fiscal year, we're talking about a deal with Liberty. We're talking about a deal with a Nordic bank and a Liberty Global deal. These are massive mega deals. The only thing is they don't contribute immediately. So the revenue upside will only kick in from FY25, FY26. And a lot of these deals are cost optimization deals, which means there is a risk of margin compression in the near term. They are competitively fought, so they're large deals, but there could be some impact on the margins. Just want to end with the the growth forecast for the company and how it's been. There you have it. 22 was solid, the whole post-COVID boom, the digitization, acceleration. FY23, things moderated. FY24, they practically come to a grinding halt. The 3% is what Nomura is estimating for a top-line growth. And from there, it's going to be a steady climb back up to 7 to 8% in terms of a top-line growth for Infosys. Prakash, the question is, given these deal wins, the recent announcements, is there a bit of a catch-up that Infosys can do vis-a-vis its peers?
Oh, certainly. So, Rima, look at what are in the first place, what are the primary reason for most of these large cap companies to have lost weight? They shed a lot of the valuation premium that they got for the simple reason that everybody anticipated a slowdown in global spending, particularly out of the US. But, the trickle through effect of all these orders, and especially you have some of these largish orders, the British Oil order, the Danish bank order, these are very high quality orders which have great visibility over the next many years. So after that, what happens is that you probably don't have to worry about something else not coming in because it kind of forms a base, a very strong base for the next visibility of earnings for the next few years. I think the risk on most of them, especially Infosys, on expectations on revenue growth are more on the upside. I mean, people are anticipating 7.5% improvement. I think it could probably be much more. You just have to wait for the US to signal decisively that things are fine and there's a catch-up which will happen. I don't see any reason why that would, but is there money to be made? Maybe another 20% of the next 12 months, which is great if you buy into a large cap IT name, but there's much more activity within smaller names in IT. And you very well highlighted a couple of days back the NIT learning systems, growth that we saw. Those are opportunistic moves that you will see in the market when things start looking up. And it'll be very niche areas. It will not probably be very broad. But that's where, a huge delta could be made rather than the TCS, Infosys of the world, which will organically do that 15-20%. But if you really want to create that kind of alpha, you'll have to go down on the market cap ladder a bit. But IT is definitely something that would surprise the way PSU banks did for this month. It's just been about 12 days, 13 days, but we've seen the PSU bank reset, and that could happen in IT probably during the rest of this month as well.
Okay, so that's a take on IT and the way these stocks have moved. We will take a break in a bit. But before that, just some more movers and shakers. Let's go and look at some of the mid-cap market names. Restaurant brand Asia. There was a big block trade today. 25% equity changed hands, and Nimesh was indicating in all probability it's a large PE exit. And we'll have confirmation, of course, after market hours. So that's one stock in the news. The other one that's having a good run into the weekend is actually Zomato, which is up about 4-5% as well. Prakash, weekend stocks, so whether it's burgers or pizzas or the guys who deliver these, what's your take? Do you like anything?
So I think Burger King restaurant brand has been quite interesting, but the only thing is that it is still going through a phase of, consolidation on its assets, on the kind of network that it has created. It has superior unit economics as compared to Westlife, which is McDonald's franchise. Given the fact that they've been running much more efficient, smaller outlets. But there is this whole propensity to grow too fast, and that's why it's still some time away before they start showing or throwing profitable, metrics. And if you look at their P&L, you'll probably be disappointed. But this exit probably is something which was on the cards for a while, because this PE fund owns much more than what they've probably sold purportedly today. But the buyer's profile will probably be interesting. If you have strong long-only names, as Nimesh was indicating, that means there could probably be less jerks you will see for the subsequent this thing. So it's more of a technical reset, but fundamentally, I think there's still much more well-established names in that QSR this thing. And that space will hot up with more competition from the likes of Haldiram and all coming on the ethnic food side. So yeah, it's something which is promising, but I won't jump at it because it's pretty richly valued also in certain parts. So kind of observe it. If you get a reasonable band of buying into it from a value perspective, then maybe yes. But at this point, not to jump at it.
Okay, got that. Prakash, stay on. We have more questions for you. And by the way, we'll get Nimesh in because he's the one who's alerted us about restaurant brand Asia, about this big block trade. We get him to talk about it. And Nimesh, by the way, will also give us some clues as to why Bajaj Auto could be running as much as 5% today. Two very interesting stocks in focus in today's trading session. Take a break and come right back. And then, of course, we'll also be joined by our Alpha manager, Anand Shah of ICICI Prudential AMC.
Welcome back. 20,196 on the Nifty. It's a 95-point rally, eyeing a close at that 20,200 mark today. This is turning out to be a solid last 1 hour of trade for our markets. Picking up right now, Bharti Airtel has rallied 1.5% today. This week, the stock hit a fresh record high and it's gone up 5% over the last few days. Axis Bank has been another notable mover. But as we were pointing out, Restaurants Brand Asia, that's a stock in focus. A large block deal took place earlier in the morning. Nimesh is here with the details. Nimesh.
I remind us, so the stock is holding on to the early morning gains of close to 10%, huge volumes. There was a large block, 25% of the company's equity got changed hands. And what I understand from sources, the private equity investor, which is Everstone, they sold 25% stake to institutional investors. Remember, the block happened in the block window, so only institutions can participate. And within the buyers, I understand 90% of the book was bid by long-only funds and 10% was participated by the hedge funds. So the disclosures could be quite interesting for Restaurant Brands Asia. Now, if you look at the shareholding pattern, how that's going to change after today's block deal, Everstone was holding close to 41% stake. Now they've sold 25%, so they will be left with 16%. Need to see as to what the plan is for the remaining 16% stake, which they're going to hold on or not in RBA. So that's something to track. In terms of institutional holding, it's quite scattered. The mutual fund owns close to 7%. Insurance companies are owning close to 2%, and the FIs were owning close to 26%. So combined holding is 35%, and that is now likely to go up to all the way highest 70% after today's block deal. So it will be largely owned by institutions now. Look at what the management said post the Q1 in the conference call. For FY24, the company has targeted that for the Indonesia business, they're looking to achieve cash break-even in FY24. As far as the India business is concerned, so look at some of the targets. They're targeting 450 stores by end of FY24. They're looking at an SSG growth of 10%, and they're looking at a gross profit of nearly 67%. So the numbers will look strong going forward because of the seasonality as well. But in a large block, what I understand, the private equity fund, which is Everstone, they've sold 25% stake to large sort of institutional investors.
Okay, that's Restaurant Brand Asia. Big move happening today. Nimesh, let's also talk about the other one. You alerted us about Bajaj Auto just before markets had opened up. And what a rally. This is on the back of a brokerage note, right?
Looks like, Surabhi, there was an interesting note from BofA Securities. They've upgraded Bajaj Auto to buy now from neutral, and they've raised the target price to 55.50 versus 50 earlier. Now, the title is quite interesting. They believe it's a time to trump, and multiple growth drivers are in place for Bajaj Auto going forward. In fact, they believe that all the businesses segments are now subject to a positive growth in FY25, largely on few things. One, export is turning corner. They believe that the three-wheeler is on a high, and they also expect gradual recovery in the two-wheeler business as well for Bajaj Auto. Now, on back of all this, they underpin a 14 to 15% revenue CAGR for the next 3 years between FY23 to FY26. Now, BofA believes that the big valuation relating will come from the two E's, which is basically electric vehicles as well as the exports. So they are banking on exports to pick up, volumes to pick up, and hence a big upgrade to buy now. And they've raised the target price in Bajaj Auto to 55.50.
Okay, what a move. And it's actually not just Bajaj Auto. It seems to have rubbed off on a lot of its peers as well. Big move in auto stocks today. Thank you very much, Nimesh, for both of those alerts on Bajaj Auto as well as Restaurant Brand Asia. Well, let's move ahead and say hi to our next guest. Anand Shah, Head of PMS and AIF Investments at ICICI Prudential AMC, is joining in. Anand, hi, good afternoon. Good to be speaking to you on a Friday afternoon. So let's start with this move on autos, right? Our colleague Nimesh was just telling us about this one brokerage note, but it's really something. M&M 2.5%, Hero Moto 3.5%. Most of them have had a pretty flying Friday. How are you positioned on the sector, autos or let's say auto ancillary?
Hi, very good afternoon. Yeah, I think if you see the last couple of years, since the steel prices have sort of corrected, there has been a very strong earnings growth rate. To that extent, the sector had actually underperformed its earnings growth rate. Relatively, if you ask me, they had become fairly cheap also in terms of valuations. But more importantly, what is happening is we had a very difficult year in terms of consumption, at least the last 6 months. So I think a run up to the festive season, it started off on a good note. The base is low, and to that extent, And again, as I said, the valuations are low. Yes, people are a little bit of excited that we might get some good growth on a low base, and margins are anyways looking nice given that the commodity prices remain soft.
Anand, afternoon. This week belongs to the PSU banks. The Nifty PSU banking index has rallied 7.5%. Are you a buyer in any of the PSU banks?
We've been, frankly, owners of corporate banks in general and PSU banks also to some extent. And what has changed, if you see from a little longer term perspective, corporate banks actually paid a heavy price of slowdown in manufacturing, infrastructure. If you recall, starting 2015, we had an asset quality review, then we had a demon, RERA, GST, and the NBFC crisis. A lot of NPAs got accumulated and provided for. What we're seeing going forward as manufacturing recovers, you can see we are already talking of power deficit to that extent, utilities picking up, and even the infra turning around. We are seeing those NPAs which are fully provided for, we are going to see some good recoveries there. And the incremental slippage is also not very high given the economy is doing well. So I think banks are generally most leveraged to the economic growth rate. And as we've been talking about all along that there's nothing wrong we are seeing in India. Economy is doing fine. Consumption is expected to pick up from a slow growth last year. And the manufacturing is already doing well. So I think that's all a rub-off effect on the banks that they will have lower slippages and more recoveries from the existing NPAs, which means profitability outlook remains healthy.
Okay, got that. Anand, now, how are you looking at the pockets of the mid-cap market that were running red hot? And I'm, of course, talking about manufacturing, PSUs, capex, defense, right? So what is the approach going to be? Have you lightened positions as we've run up to this 20,000 level? Are you still holding? Would you buy more? What are you doing here?
Very tough question, but let me try. So I think that the trick is to go bottom up. To be very honest, there will be some of the stocks which don't deserve to be where they are. Definitely, there are some stocks which are more thematic or more stories rather than actual underlying. But we own, or rather, we manage quite a lot of small cap and a mid cap money as well. And when we look at our own portfolio, we are finding that pockets of companies in manufacturing which were not doing well for almost a decade and a half, especially since 2010. It's been a very tough time for many of these industrials, capital goods, industry product companies. Many of those are their utilizations have picked up, margins are looking good, exports, some of them have actually captured some of the exports market. So all in all, I think it's time to be bottom up. We find a lot of value in many of mid and small cap companies. You spoke about PSU banks being one of them, where again, yes, there has been a lot of painful period in the past, but the outlook looks positive. So the trick is to go bottom up, do a lot of fundamental research, analyze them, predict the cash flows, and look at the valuation at which you're buying them.
Do you want to throw a little more color on, some ideas in this mid-cap space? Because money is flowing in thick and fast into the mid and small cap universe. You're managing money. So if you had to put fresh money to deploy right now in the mid-caps, which pockets would you look at?
So again, I'm saying it's a tough one because, when we were investing in small caps, we were very much overweight on manufacturing, industrial cap goods, logistics, utilities, and they were fairly cheap 2 years back, 3 years back. Today, we have seen sharp rally there as well. Nevertheless, there is a strong earnings also. We're actually holding on to our portfolio. We continue to like select companies in metals, select companies in industrial products, select companies in cap goods. I think more broadly, if you dissect large caps and mid cap, small caps, in India, the top 100 companies have very little manufacturing and manufacturing related business. is dominated by consumers, banking, financial services, IT services. So if you really expect that manufacturing in India will do well, you have no choice but to go mid cap and small cap. And that's where those who have survived the tragic 10 years when China was exporting deflation to the world and manufacture in general suffered, those who have survived those difficult 10 years, I think they're all looking good. Their balance sheets have improved, their cash flows have improved, their cost competitiveness has improved. So I think we are finding many strong ideas across textiles, across auto hangs, across generally in manufacturing.
Okay, so that's the sense on manufacturing. Anand, then finally in this market, are you even thinking of any fresh ideas on the horizon? Anything new, or basically maybe anything that's forgotten, because we've been so busy preoccupied talking about capex and engineering and manufacturing. Any other areas that one should start looking at?
Indeed, I think while we captured the manufacturing early on, we were looking at what is the allied beneficiaries of manufacturing. One of them obviously was corporate banks, but the other one, which is more recently come into limelight, is power. Look, the utilities have been, in a way, sort of a very low growth environment for a while. They also did stop the capex. We've been for a very long period of time not intending to put large capacities in thermal power plant because of ESG and other issues, but most importantly, the demand was slow. What has happened over the last 2 to 3 years is all the spare capacity in power plants have been sort of utilized, and we have now reached a point where August, we all know, was a deficit month. We had a peak power deficit, which was very large, and to that extent, all of a sudden, there is a sense of urgency to see to it how we produce more power. So I think many segments, which includes the utilities, but also the allied businesses, balance of plant, cap goods, we are seeing all around, interest in those areas, and we've been sort of, even REC PFC for that matter, has been a limelight. So those are the various allied businesses, as we are talking about, which have been sort of, should be looked upon, is what I would say.
Okay, got that, Anand. Thank you very much. Good talking to you as always. You have a great weekend, and we look forward to connecting again soon. Well, with that, we have to take a very quick break. Come back on the other side. As always, a check on what dealing rooms are doing this Friday. We'll have Nimesh back in our special segment, D Street Chatter. And of course, some final calls coming up on the trading side with Mitesh as well.
20,200, the ease with which the market is conquering levels, moving on 100 points. It was 20,000 on Wednesday, 20,100 yesterday, and today it's 20,200. Let's find out what dealing rooms are saying. Nimesh is here with D Street Chatter. Nimesh.
Hi, Rima. What a strong momentum day, right? And this is despite the fact that there is a basket selling at a leading FI desk. So, again, today's, FI numbers or the institutional numbers will look a little skewed because of a few things. One, there is a FTSE rebalancing, there is index rebalancing as well, and also the RBA block will have a bit of an impact in the institutional flows. But barring these, adjustments, I understand there is a net sell figure or net sell flow from the larger FIs in the Nifty name. So, and this is despite that, the Nifty is 100 points. So that shows the kind of momentum we are in currently. In terms of sector, it looks like there's a bit of sector churn happening now. One day it was pharma, today it's auto stocks which are buzzing in trade and on good volumes as well. And on the other side, some bit of profit booking in the OMC stocks. But it's a broader market which where the momentum seems to continue. Now there are some signs of distribution as well. So a word of caution in the broader markets. But despite FI net selling, there is this big momentum which is added to another 100 points on the Nifty in today's trade.
Okay, so that is the overall sense and what momentum we've had really last couple of sessions. What about stocks? One, you already told us, Nimesh, there's a buzz on the block on Restaurant Brands Asia, which is likely to be a PE exit. What else has been on the radar today?
A couple of stocks which is part of my list today. The first one is Bandhan Bank. That stock is buzzing in trade on good volumes as well. I understand there was a selling pressure from a leading offshore fund. That seems to be largely over now. And also there is a lot of chatter about the new appointment of the CFO. So that's something to track as far as Bandhan Bank is concerned. The second stock is Panacea Bio, something which we don't talk too much about. It's completely off the radar, so to speak. But again, now I understand, a large strategic investor seems to be exiting the stock, and maybe that selling pressure can get over very soon. So that's something to track in Panacea Bio. The third stock is Indus Tower. We saw a huge move in Vodafone Idea in today's trade, and on back of that, some bit of momentum in Indus Tower as well. In Indus Tower, there is also feedback that a leading domestic fund is an active buyer, and hence you've seen a lot of delivery volumes as well for the last couple of days, and that's the case today as well. So that's the third one. And the last stock is Union Bank. You're seeing a lot of momentum in the PSU bank stocks of late. Union Bank stands out today, largely on back of very strong buy flow. So the delivery volumes are going to be quite high in Union Bank in today's trade.
Okay, thank you very much for that. Let's now go back across to Mitesh Thakkar for a few BTST calls as we wrap up the day, the week, and the day and the week. Yeah, Mitesh, what do you have for us?
I think auto, after the Bajaj Auto great auto stocks have had a good day today, and TVS is closing at the day's high. The volume numbers are good. So BTST with a stop at 1490 for targets of 1520, and the other one is Endurance Technologies. That's also having a good session. So BTST here with a stop at 1608 for targets of 1640.
Okay, got that. Mitesh, thank you very much for all the trading advice today and through the week. You have a great weekend, and we will catch you again on Monday. So the Bandyopadhyay Group Chairman at IndiTrade Capital is our next guest on the show. Sudeep, thanks for joining in. It's been a week of big headlines, 20,000, 20,100, and now 20,200. And in between, a bit of a mid-cap shakeout. You tell us, what have you made of all of it? And if you were to buy one mid-cap stock or small-cap stock afresh, which one would it be?
Well, I think the market is definitely on a roll, and there is a strong positive bias. And we are ignoring the signals which are coming from the global markets, particularly related to the oil prices going up, and also the further Fed rate hike may not be immediately, but maybe being ignored by the market. There is definitely a positive momentum, and in spite of things being confusing in China, I think market is choosing to continuing to move up. And also we must remember, this is in spite of on few days FII selling heavily, Indian markets have moved up. So very clearly the domestic investor, domestic institutions have a lot of confidence and faith in Indian markets. And that's pretty much what we have been seeing. There is sector rotation. There is rotation between mid cap, small cap, large cap. All that is happening. But the story is of a secular uptrend. And that's the reason, as you explained, 20,000, 20,100, 20,200 now. So yes, it's good to see the way the market is moving. A bit of caution probably needs to be exercised at these levels, particularly some of the mid-cap, small-cap names are looking a little stretched, and there one needs to be careful. As far as buying one stock from mid-cap and small-cap universe, I think we like Bharat Forge. I don't know whether we will classify it as a mid-cap, but this is one stock which we like. Where the main business of US commercial vehicle that is picking up, and that is good news for Bharat Forge. But beyond everything, I think there is a large defense play in Bharat Forge. And with the defense make in India and the orders they are getting and the flow of orders, I think Bharat Forge is definitely a good story, and that can be bought in at current level. It hasn't run up like the other PSU defense stocks have run up, and there is probably a lot of steam left in Bharat Forge.
Okay, so Bharat Forge is a stock you like. It's up 45% in the last 1 year. So it's moved up smartly, but not comparable to many of the other stocks which are up close to about 100%. The IPO market is also, alive and kicking. Today, Yatra Online opened up for subscription. Now, this is an online travel agency, very similar to Easy Trip, Ease My Trip, or a Make My Trip. In terms of the pecking order, Yatra is number 3 in terms of gross bookings and operating revenues. At the top, you've got Make My Trip, then you've got Easy Trip, and then you've got Yatra. But where Yatra differentiates itself from its peers is that Yatra gets greater revenues from the corporate segment, the B2B segment, which according to the management is far more profitable. So the corporate segment, due to its greater reliance on corporate segment, the company got hit hard in COVID, but it's also now seeing quite the bounce back. The IPO opens for subscription today. The price has been at 135 to 142 rupees per share, and they're looking to raise close to about 600 crore rupees. Listen in to what the management had to say, and then we'll get Sudeep's view on the stock too.
We are the largest player in the business travel category. Obviously, business travel got impacted quite significantly during the COVID years. But if you were to look at the pre-COVID years, you would see that, we were a clear number 2 player in the overall industry as well. Now, as business travel has recovered, right, and the recovery of business travel has happened more towards the second half of FY23, you would have seen our growth rates being much stronger than our peers, in fact, far outpacing the growth in the market over the last few quarters. If you look at, pre-COVID, firstly, as a benchmark, right, about half our business was B2C, about half was B2B in terms of gross bookings. Obviously, last year, the recovery happened first in the consumer segment and then in the business travel segment. So last year would have seen, a mix being skewed in favor of consumer. Overall, from a margin perspective as well, the margin would be skewed more in favor of business travel from an overall company perspective.
Sudeep, Yatra was number 2 prior to COVID. Now it's slipped to the number 3 position, but it's got greater leverage to the corporate, the business side of booking. Thoughts on the pricing of it at 140 approximately? It's much lower than the price at which the promoters had invested in the company. They had done a rights issue last year, and at that time, the promoters had pumped in money at 236. So if you compare it to that, the pricing is on the lower side. Thoughts on the pricing, the valuation, and how it stacks up versus peers?
Well, I think, what you mentioned itself shows that the company is keen to get the issue, make the issue a success. If you compare with the valuation of Make My Trip or Ease My Trip, I think they are offering the shares at a much lower multiple, much lower valuation, whichever parameter you take. And considering that there is a significant upswing in travel and tourism, and as they have rightly pointed out, they were skewed towards business travel, which is a higher margin accretive business. And with the travel picking up, corporate travel picking up, and expectation of further travel picking up with work from home becoming a thing of the past to a great extent, I think they will improve their market standing as well. And I won't be surprised if they again, get the number 2 slot number one may be difficult, but the number two slot they may get with corporate travel picking up. By and large, I think it's a good issue to get into. The margins and the profitability was definitely under pressure during the COVID years, but it has picked up now and is expected to pick up even further as things move. The travel and tourism industry is growing at 10% plus. And under the circumstances, I think Yatra Online will flourish with a better margin profile than many of the competitors.
Okay, so positive view on Yatra. We'll keep that in mind, Sudeep. Stay on. We have some more questions. Quick break, and then we will look at the last leg of the trading session today. Welcome back. Here with us on Closing Bell, and we are counting down to the close. Markets actually doing pretty well, 67 points higher on the Nifty. Maybe we don't get that 20,200, but nonetheless, I don't think the bulls will complain too much. Sudeep, we were just discussing this rally in auto stocks. It's been quite phenomenal today, the way Bajaj Auto has moved higher and a couple of others as well. We're going to be rounding up to the festive season. So sentimentally, I think it's all working in favor. But the only issue is that stock prices have also run up a lot. Any buys in auto?
Well, we have been bullish on Mahindra and Mahindra for quite some time, and we maintain our stand. I think only the challenge in between came in terms of their buying stake in RBL, which was, I think, not explained well and not understood well by the market, and not even now it's understood clearly that part of the strategy. But beyond that, I think they're ticking all the boxes. They're doing the right thing. They're, the tractor sales are expected to go up in the festive season. They had good numbers on the tractors anyway. The SUV business has picked up remarkably well. There's been a turnaround of sorts. They are working on their EV, and hopefully that should come on the road very, very soon as well. So I think overall it's a good business. The unrelated diversification, foreign businesses have been shed, capital allocation has improved. So I think M&M, even at current level for a long-term investor, is good. We did have a look at the research report which came today on Bajaj Auto. That's pretty interesting. We also had maintained the view that Bajaj will turn around and demand a better valuation as soon as exports pick up. I think exports are on the verge of picking up. The Nigerian market, which was a pain point, I think is stabilizing with election has happened there, and the new government has come in place, so things are stabilizing, and I think Bajaj export business will pick up soon. And with that happening, and with the launch of premium vehicle and EV soon, I think Bajaj will be a formidable player once again in this segment, and can be looked at from a long-term investor's point of view.
Okay, you will look at Bajaj Auto, can be looked at from a long-term point of view. Sudeep, any thoughts on mid-cap paint companies? We've been talking about the entry of large challengers in the painting industry, whether it's the JSW, but Birla is actually here now. Their product has been launched, the brand name has been revealed. Would you be a bit concerned if you had, say, a Berger or an Indigo Paints in your portfolio?
Well, I think, overall the paint industry is going through a phase where a lot of new companies are coming. Even Indigo is a relatively newcomer, and so Berger and Asian Paints have competition now. Leave aside the old established small niche players. I think these new players are going to give them a run for their money. But the fact remains that Asian Paints is a leader by a long stretch. And, in a competitive scenario, we believe, and we have seen it getting played out in multiple industries, the leader doesn't get weakened. Leader, in fact, gets strengthened eventually. So I think I won't be worried if I'm an Asian Paints shareholder. I won't probably worry even if I'm a Berger Paints shareholder. I think the market share will come from unorganized sector, and market share will come from the other smaller players for the new entrants when they do aggressive pricing and aggressive marketing. That's the way I look at it. So I won't be worried about either Asian Paints or Berger Paints. As far as that paint industry is concerned, I think even now, the oil prices are going up, so there is a little bit of a concern on the cost. But this comes with a lag. It won't affect them immediately. Maybe the Q3, Q4 may get affected because of cost push due to petroleum prices going up.
Okay, all right, Sudeep, we will leave it on that note for today. Thank you very much for joining in. Have a good weekend, and we'll catch up again soon. Well, Friday is ending on a good note. Maybe not above 20,200, but perhaps that's just as well. Slow and steady wins the race, as they say. 68 points higher on the Nifty, with almost 11 to 12 stocks hitting fresh 52-week highs. So the mood is very buoyant in the large caps, though you can't take away from the fact that we had that selling coming in the moment that 20,200 mark was hit. Just talking about the big gainers, we've been speaking about auto, so that of course has been the big headline today. Bajaj Auto, M&M, Dr. Hero Moto, all up and about. Dr. Reddy's is the other stock that was also among the top 5 on the Nifty, gain of 1.5% over here. What else? Then, of course, a lot of the large banks and large cap IT companies, they've done well today. HCL Tech, Wipro, Tech Mahindra, TCS, good day for frontline IT, you would have to say. Not very big gains, but 1% to about 1.5%, depending on which stock you're looking at. HDFC Bank has had a good run. Some of it is technical factors because of the inflows coming in due to adjustment in global indices. So that's been playing out. Some incremental buying in metal and commodity stocks, JSW Steel, Coal India, Tata Steel, about 0.5% in these names as well. So what didn't do too well? BPCL, and that's on expected lines, with crude prices clocking 94 to the barrel now on Brent. And because of that, some of the other related plays, like Asian Paints, for instance, that was also down about 1.5%. In general, FMCG a little lackluster, even a lever for that matter. ITC, FMCG not so hot, but it was really out and out IT and auto. I think these were the two star sectors today, Rima.
And in the broader markets, it was the banks, right?
Yeah.
The mid-cap banks. They were the star sector. So names like UCO Bank ending up 8%. IOB up close to about 6%, Yes Bank, Central Bank, Punjab and Sindh Bank, all of them gaining close to about 4 to 5%. But at the index level, the mid-cap index came off 0.5% from the session highs. The advanced decline ratio held up in favor of the gaining side, but there was a decisive weakness that you saw in the second half of the trading session. For the week, the mid-cap index is going to go home with a cut of close to about 0.5%. A couple of the notable movers include restaurants brand Asia at one point of time up 12-13%, ends with a gain of about 6%. So a bit of a cool-off visible over there. Other than that, Vodafone Idea, 11% rally for this week, and this is the fourth consecutive week of gains for Vodafone Idea. Quite remarkable. And on the losing side, IRB Infra, Aircon, SAIL, IRFC, SJVN. These were some of the hot favorites, and they came in for some amount of profit booking. All in all, the bell is gone, and it's a positive close for our markets. Records also, right? The Nifty, sensex, both of them hit record highs in the session in the morning, and even the close is a record close.
Is that an all-time high for what it's worth? Absolutely. So good going for the market, and some caution coming in for good measure as well. Well, with that, we come to the end of trade for today and for this week. Thank you very much for watching. It's a wrap from the entire Closing Bell team, but don't go anywhere because our Friday special Smart Money is coming up next.